7th and 8th review. Just to put things in context, as you know, the program, the fund program, the ECF supported program, is expiring at the beginning of April, and we have 2 reviews left to be concluded, the 7th and the 8th. And this mission that was here a bit last week and this week came exactly to find agreement with the government on policies that would allow consideration by the executive board of the 7th and the 8th review, so that then the program can be successfully concluded ahead of the expiration date of April the 3rd. So let me just highlight a few key considerations, and then I think I'll pass it to Honorable Minister. So the Ghana recent economic performance has been favorable, despite a less supportive external environment for frontier economies. Real GDP grew by 6.7% for the first 3 quarters of the year. Over the medium term, growth is projected to remain sustained, especially on the back of recent oil discoveries. Consumer price inflation, now at 9%, is well within the band around the inflation target of the Bank of Ghana. The overall fiscal deficit in 2018 reached 3.7% of rebased GDP, excluding the financial sector cost, and the primary surplus, which is the overall budget deficit taking out interest costs, was in line with program targets. At the same time, the economy experienced some pressures in the second half of 2018, not differently from things that have happened in other emerging markets, largely emanating from foreign investors rebalancing their portfolios in the context of a stronger dollar, rising US interest rates, and volatility in emerging markets, which led to a decline in foreign exchange buffers. Good progress has been made in implementing the ECF supported program, which will end, as I said, on April the 3rd, 2019, as envisaged. 6 out of the 9 end December performance criteria were met, and structural reforms are advancing. The Ghanaian authorities and the mission reached understanding at referendum on economic policies aimed at safeguarding macroeconomic stability, improving monitoring of fiscal risks, strengthening external buffers, and enhancing the resilience of the financial sector. To this end, it was agreed that tax exemption will be rationalized and their management framework strengthened to improve domestic revenue mobilization. The authority estimates the tax exemptions cost could be as much as 1.6% of GDP in 2018 alone. New financing scheme in the 2019 budget will be used solely to fund budgeted spending, and as part of efforts to address fiscal risk from state-owned enterprises, an oversight body, I think the name is SIGA, will be established to monitor and manage the state interest in specific public entities. Monetary policy should continue to remain prudent and complement fiscal adjustment efforts to keep underlying inflationary pressures in check and avoid surprises on the upside. The authorities have shown great commitment to financial stability, with the resolution of 9 banks in a period of time that it is less than 18 months, which is really, I can tell you, unprecedented, I think, by many, many standards. I am personally not aware of any country that has done that. And this will help improve medium-term prospects for economic growth. The overall financial system is adequately capitalized and well-positioned to support credit growth and investment going forward. The Bank of Ghana is also introducing measures to strengthen its banking supervision framework. We also discussed risks to the outlook and vulnerabilities stemming from exposures to external sources of funding and potential policy slippages. To mitigate these risks, the authorities, as you all know, have renewed efforts to strengthen external buffers, and they've also enacted legislation that introduces a fiscal rule that set a cap on the budget deficit, and have established a fiscal council to underpin fiscal discipline and preserve macroeconomic gains made in the last 2 years. As I said, the board will consider the 7th and the 8th review, subject to us fulfilling all the remaining conditions, which I am confident we will, by the end of March, and then essentially will mark the end of the ECF supported program. I really would like to take this opportunity to thank the authorities for the exceptional warm hospitality, and also I have to say for the very enriching and constructive discussions.
Very much indeed, and welcome. And Annalise, I would like to thank you for these 2 years. and to also welcome Carlo, whom we will be meeting a lot more, and of course our resident rep Albert will be here, and thank you, Mr. Mujarat, our executive director at the fund. And really, I think from what we have heard, it's an exciting future that we are looking to. But it really, in the end, has to be undergirded by real discipline going forward. And that's something that we as a nation have to come together to ensure what we now call irreversibility. As the President mentioned today, this is well, the 16th program we've been in, and he essentially is saying never again. You know, we have enough resources as a country going beyond aid, Ghana beyond aid, and we should be able to discipline ourselves, leverage our resources, create a confident society, and manage ourselves well. And you know, we went to Parliament last year to pass a Fiscal Responsibility Act, which then gave us a band of 5% within which the deficit should be, and also to ensure that we have a positive primary balance, which is important in terms of debt accumulation and sustainability. But I think the other thing that we were also able to do was to call for the impeachment or firing of the finance minister, if you went beyond that. And we stayed in Parliament through midnight on 22nd December to put the news around our own necks. So it's a discipline that we as a nation should inculcate. I feel really confident that we've built a chassis that can go forward strongly. And that really is underpinned by the really courageous work that the central bank did with regards to the banking consolidation, so that we now have the ability to fund the transformation that we are seeking. And this is what Planting for Food and Jobs, the 1D1F program, the stimulus program. But I think the rewards, in a sense, have been quite stunning from when we came in January of last year. To see that our deficit has gone down to this level of 3.9% from 7.3 using the rebased figures, inflation down from 15.4 to 9%, growth, as you have seen, was a couple decades low of 3.7% or 4% to 8.1% last year and 6.1% this year. And of course the debt to GDP ratio strangulating 56.6%, sort of rebased to now 54.4%, all within, you know, these 24 odd months or so that we came to meet that. But beyond, you know, the Fiscal Responsibility Act is also the Financial Stabilization Advisory Council and the Fiscal Advisory Council that will help the presidency to ensure that we keep, you know, into what we have to do, and that's important. We also have the Economic Planning Coordinating Committee here so that we can work closely with the central bank to ensure we maintain the discipline. And even more significantly, President mentioned a social partnership agreement with labor, with employers, and with government, in which we will thoroughly look at our growth, you know, promote productivity, and ensure that the development agenda is shared in a real way. So we move forward. I think you all recognize the last year in going to the market, we're able to raise $2 billion and the longest maturity of 30 years that we had done, the lowest rate that we've been able to do. And S&P, as you know, also upgraded us from a B- to B. So we are truly excited about the future. I think the behavioral changes that we have experienced these 24 months is going to continue, and these institutional mechanisms that we have put in place is going to ensure that we do that. Fiscal risk, as Alanisa mentioned, the energy sector, so we need to look at that very seriously and maybe renegotiate some of these PPAs that we have and cancel some that we have to, so we can save money. Commodities, of course, is always a problem with regards to control of the pricing, and this is where the whole concept of a regional hub, Ghana being a regional hub, becomes important, because we need to increase our export proceeds in a diversified way outside of commodities. So we are looking at logistics, we are looking at petroleum hub, we are looking at education, all of those areas that will strengthen and diversify, our ability to bring in the foreign exchange for what we have to do. But yeah, I think Ghanaians should be confident about what is coming. We've also committed ourselves to some major restructuring of our revenue authorities, so that the issue of revenue mobilization will be something that we take care of coming into the future. So just really would like to thank the fund for these 2 years of being such a trusted advisor, and we expect to continue to consult with them and to work with them going forward. And it's, I think it's just a new era for the country, and we are poised to be very successful in the years ahead. So thanks again, and thank you all for coming.